Hello, it's Robert Miner with Dynamic Traders Group with a brief video for our YouTube and Twitter subscribers where we take a look at a market in depth and preferably one that's probably going to have a good trade setup in the next few days. In this case, it might be a week or two, but it's such a major market and it affects other markets that I want to get a head start on this so you can be prepared for when this reversal comes because I'm going to give you the targets, which potentially could be met, and the reversal signature that not just a weekly or a daily, but a multi-month reversal is probable, and that's the dollar index. So even if you're not interested in the dollar index trends affect almost every major financial market as well as commodity markets and others. Besides that, whatever you learn from what we talk about here are going to be applied to any market in any time frame. So this is really a learning experience as much as a tip sheet, so to speak. I've been doing this for 35 years, and what I teach is applicable to almost any actively traded market, stock indexes, Forex, Bitcoin, gold, silver, etc. So remember, you want to learn to trade, not learn to forecast. Forecasting is for suckers. It has nothing to do with trading whatsoever. Trading is about identifying opportunities with acceptable capital exposure that you can take advantage of with specific trades. That's what we focus on. Okay, let's take a look at the dollar index. Well, this is the dollar index weekly data. And let's take a look at the Elliott wave position. I use Elliott wave a lot, as you know, to help us identify where a market is within a trend. And then it's really helpful to help identify if a market is getting near the end of a trend. And that's what it looks like here on the dollar index coming up from the January low. It looks pretty clearly like we got a nice 1 and a 2. And then we have a wave 3 and a wave 4 correction. And coming off of the January 2022 low is then it's somewhat of an accelerated advance, higher rate of change. So this is more than likely the final section of the advance off of this January 2021 low. And if that's the case, how's it subdividing? Well, in Elliott wave terms, more than likely a 1 and a 2, a 3 and a 4 into early June. And then it seems to be subdividing again in a nice 1, 2, 3, 4, 5. We'll take a look at this on the daily data. So the two pieces of information here, or three pieces really, is one is that with this wave count is that the dollar index is probably within 2 to 3 bars, and in this case weekly bars, of completing the advance from the January 2021 low. So if it's just going to make a correction from that trend, the correction should last several months. So it should be fairly significant top if indeed this wave count is correct. So let's look at the immediate position. Here is our DT oscillator on the weekly data, pretty reliable. If it gets into the overbought zone, that it's certainly a warning that a weekly high is very near. Only the fast line is overbought as of this week. So this is indicating that more than likely the dollar index has at least another week or two of sideways to up and up to 3 or 4 weeks before a weekly high is made. And because of the probable wave count, the next weekly high is a good possibility of completing the trend up from the January 2021 low, and at the least then being sideways to down for several months. So that's what the wave count, the probable wave count is telling us. That's what the weekly momentum cycles are telling us, that we're fairly near a significant high. Let's look at some of these time factors because they're indicating that the next weekly high and the completion of wave 5 of 5 of 5 should be by the end of July. So it could be as much as another 4 weeks, but that would, or at least it should be, a maximum. So let's take a look at these, and here's a key one. From this low to high is the week ending January 29th. That is a type of time factor that usually indicates the maximum time to complete, in this case, the next weekly high, because the weekly high is likely to coincide with the monthly high, fairly significant. That same week is the 62% alternate time projection of what I have labeled waves 1 through 3 from the wave 4 low. typically the maximum time target for a wave 5 of the same degree as this 1, 2, 3, 4. So fairly significant. And because the next wave 5 is likely to complete the entire 5-wave advance, again, multi-month high is probable. And also in 2 weeks, the week ending July 15th, that's the 38% alternate time projection of waves 1 through 3 of 5 from the wave 4 low. And that's typically the minimum time target for a wave, in this case, the smaller degree, wave 5, the wave 5 of 5. So here's what we got, is we have the probable minimum upside target time-wise would be the week ending July 15th, in other words, a couple weeks from now. That ties in almost ideally with the momentum cycle. The probable maximum time to complete this 5-wave advance in the wave 5 of 5 of 5 is the week ending July 29th. So we're looking at between the middle of July and the end of July to complete the bull trend from the January 2021 low. So that's pretty significant. And price-wise, the ideal price target is right around 106, and we'll just call it spot 15 up to 107 spot 40. Why that area? That is the price target from both the wave 5 of 5 of 5 as well as the higher time frame price target of the wave 5 of 5. And they both group in fairly close together, indicating, multiple time frame, multiple degrees of price projections nested fairly close to each other in a relatively narrow range, not too far above the market. So let's go to the daily data, and this is all well and good. We've got a minimum and probable maximum time target on the upside. It's reinforced by the momentum cycle and by the price target, multiple time frame, multiple degrees, price target not far above the market. But let's take a look at what the market can do to indicate that this entire advance is complete, whether it reaches these time and price targets or not. So this is the dollar index daily data coming up off of what we had labeled the wave 4 low from January 2022. We had it labeled on the weekly chart. So let's bring it up here, probable 1, 2, and 3, and 4 into the late May low. If that's the case, this would be a wave 5, and it's already made the new high, which would be typical of a wave 5. But keep in mind, when this section is complete, it should complete the higher time frame or higher degree trend going all the way back to January 2021. This is one potential subdivision, Elliott wave count coming off of the May low, potential 1, 2, 3, 4. And if that's the case, it would be in a wave 5. And again, when that wave 5 was complete, that would be a 5 of 5 of 5. So it's in an important position to be aware of potentially not just a multi-week high coming up soon, but a multi-month high. So I have just a couple of the key pieces of information here on this daily chart. That's the 127, 162% external retracements of this wave 4 or 5, and the probable maximum time around July 26th. On the weekly chart, it was the week ending July 29th. And that's because that's the low to high. Again, that's not the time target for a high, but it's the probable maximum time before this section up from the May 30th low is complete. And again, it should complete the higher time frame trend. So what we do is we identify what signal could the market give, clear, unambiguous signal, that this section up is complete, because this is the third degree lesser section. So when it's complete, it's going to complete a much higher time frame. Well, what's something very simple at this point? This is probably a wave 4. However you want to count this, is it's a clearly identified, distinct corrective swing low. And the end of that correction, this is the daily close, the January 27th close just from the past week. If the dollar index should close below 103.67.8, that would break the bullish pattern. That would indicate that this section is complete, which then would indicate that the higher time frame is complete. So we have a reversal signal really close to the market, at least where the market is right now. So as the market advances, I should say, if it should continue to advance as anticipated for another week or two, if it should do that, we'll be able to raise this reversal signal up, at least probably closer to the market, and that's what we do in our DT reports. So that's where we're at with the dollar index. I wanted you to be aware of this because sometime between a week or two and up to about 4 weeks maximum, more than likely the dollar index is going to make a high that's going to last several months and have a correction that would last several months from wherever that high is complete. And the maximum time and price targets are not too far above where the market settled up this past week. And the reversal signal is very close to the market at this point in time. So that's how we look at a market, whether we're looking at hourly charts or daily charts, the indexes, stocks, whatever, is we identify the probable position, the probable targets, and then importantly, what can the market do to indicate that a reversal is complete? That's it for today. It's Robert Miner. Stay safe, stay healthy. I'm over and out for now. See you next week. Take care.